question. I believe taxation is not new to every one of us. So I just want to know, what do you know about tax or taxation? Anyone, maybe one or two, so that I can build on what you know from. I want to start from known to unknown. Anyone, just anything you know about taxation. I believe we have all heard about taxation or tax before. We all pay tax. So whatever you can say about that, I will be glad to start from
Can
there.
I try?
Yes.
Okay, can I?
Okay, good
Okay.
afternoon, sir. My name
Good
is
afternoon.
Winifred. I'll say tax is a regular fee that is being remitted to the government by every business owner, either
Okay.
yearly or quarterly, depending on the signed agreement with the government.
Thank you so much. I think that one is a good start. So it means everybody knows about tax. We've heard about tax before. So now let me start from that place where you stop. So I'm going to start from this angle, introduction to tax. So like she said, tax is a mandatory financial charge or a compulsory levy imposed by a government on individual, business or businesses or other entity. That is where I want to stop for now. So when we are talking about tax, tax is a mandatory or is a compulsory levy that every citizen must pay. Either you are an individual as a person, as a staff, as employees of organization, you must pay your tax. As a business, either business name, either liability, either guarantee, and so on. We are going to be looking at all these taxes as we move on. Now, what is the essence of these taxes that governments are making it compulsory for every individual businesses to pay? The first thing is to fund the public expenditure and the government activities. So tax has become one of the um, highest source of revenue for our government recently, which means that the money they are collecting compulsorily from individuals and businesses are being used to finance, to fund the public expenditure and government activities. What are the public expenditure we are talking about? We are talking about road, we are talking about public schools, clinic, and the likes, and other activities. So it is a form of financial contribution collected by government to finance public services, infrastructures, and other essential functions. Taxes are typically levied based on various criteria, such as income, profit, transactions, property, goods, and services. Now, what we are saying is that there are so many taxes, and these taxes are based on various criteria. Is either they apply tax on your income, that is when you are having loss, or when you are paying VAT, or they can also apply tax on the profits you make. They can also apply tax on the transaction you do with vendors or with customers. We call that one VAT or withholding. Then you also have tax on property. We call that one CIG, which is capital gain tax. We are still going to talking, and we'll be talking about that in depth as we move on. Then we also have goods and services. That also can be tailored to VAT and withholding tax. Okay, so taxation plays a crucial role in the functioning of an economy and serves several important purposes. Here are some key aspects highlighting the importance of taxation in the economy. So the first one is that we use tax to generate revenue, or tax serve as revenue in order to fund public goods and services, or public expenditure. Another thing is that is a redistribution of wealth. That is, we collect taxes from those who are working, those who are rich, and then we use it to do something that will beneficial to those who doesn't have. So for those who have companies and they make profit of 20 million naira, we collect tax from them. We use it to build public school. We use it to build road. We use it to build health clinic, so that those who are unable to afford, those who are very poor, can also partake in these benefits. Then we also use this for stabilization of the economy, because without revenue coming in for for government to spend, the economy will not move as we are expecting. We also use tax to regulate and also behavior modification. In what sense? How do we use tax to regulate? If government notice that a particular product is not good for citizens, what they are going to do is that they will increase tax on it, so that it will discourage those who are making that product, and it will also discourage those who are buying the product. For example, recently there was nothing like VAT on Pepsi, on Coke, or whatever we are buying like soft drink before. But recently now, government added VAT on it, which makes the price of the drink to go higher than what you are expected. And from there, you will see that many people will stop buying this particular drink because the price has increased. And those who cannot afford it, we need to move back a bit. And it will also discourage those who are into that business. Another thing is tobacco. Those who are into that activities, there is tax on it. And once the tax is higher than what they expected, many of them will stop, or it will reduce. Even if they are not stopping, if they are not getting 100% seized on that business, at least it will reduce the people that will patronize them, maybe harmful to society and the like. Then we also have encouraging investments and growth and economic growth. They can also use tax to encourage those who are into one or two investments. Before, there was nothing like tax for schools. And that's why we see many people see that, I think I can go into school business, I can get revenue, and I'm going to escape from taxes from government, and my money will be with me and will be for me. But now that there are some taxes trying to bring in, we are still going to discuss that later as we move on. We see that has encouraged some people, or is a caution to some people from going to that business. So that is just a brief introduction to tax. Any questions so far before we move on? Okay, so I believe there's no question. Please, if there's any question, you can just kindly just let me know. Then I will make sure that I ask questions as we move on. So you have to be with me 100% so that you'll be able to answer my questions. Okay, so let's move on. Overview of the Nigeria tax system. So let's look at the tax system in Nigeria as a whole. The Nigeria tax system is a complex structure that includes various types of taxes and levies administered by different levels of government. We have federal, we have states, we have local governments. And these three arms of government have their own taxes that they administer. So we are going to start from federal taxes. What are the taxes that falls under federal taxes? The first one is companies income tax. And what do we mean by company income tax? This is a tax on the income of companies operating in Nigeria. The rates for CIT, which is company income tax, is usually uniform across the country. I will also appreciate if you have your jotter and your pen with you, as we are going to be looking at all this detailed information. Now, when we talk about company income tax, we are talking about companies that are registered as a limited companies, and they are operating in Nigeria, and they register under CAC as public limited company. Now, this taxes rate we are talking about is divided into three parts. The first one is that if your revenue for the year, I mean 12-year calendar, if the revenue for the year is between 0 to 25 million naira, you are not paying anything like company income tax. The rate that will be applied is what we call 0%. Then, if your revenue for the year is between 25 million to 100 million naira, it means you'll be applying 20%, which means that you'll be paying tax on 20%. Then if your revenue is between 100 million naira and above, your tax rate will be at 30%. I believe that one is clear. Then for personal income tax, that is what we call payee. Okay, each of these taxes have their own acts that govern them. Okay, this tax is levied on the incomes of individual, like staff. That is what we pay. That is what every employee pays. That is what every staff pay. As long as your revenue, as your salary is from 30,000 and above, you must pay what we call personal income tax. As long as your staff salary, your salary as a staff is from 30,000 and above. 30,000 is minimum wage in Nigeria. So as long as it's from minimum wage and above, you must pay what we call personal income tax. Then we also have what we call value added tax, which is imposed on supply of goods and services. So though we have some items that we call that are exempted from VAT, there are some goods and services that are zero rated VAT, and there are some goods and services that you must pay your VAT on them, which is 7.5% for VAT. I'll be asking my question very soon. The last one is customs and excise duties. These are taxes on imported and locally manufactured goods. The Nigeria Customs Service administers custom duties, while the Federal Ministry of Finance administers excise duties. This is talking about goods that are bringing from other countries to our country. And these custom duties stay or mount their own territory at the border. So there's no good that is coming from border to our own country that will not be charged that particular amount on it. Now, this is my question. This tax I want to talk about, I want you to put it where it belongs. The first one is that Dangote Nigeria Limited, what type of tax is it going to pay? Then
CIT.
CIT, thank you so much.
30%, 30% CIT.
30% CIT. That is if they are more than, if the revenue is more than what?
100 million.
100 million and above. Thank you so much. It means we are together. Now, Mr. James John want to just collect his salary. What type of tax is he going to pay?
Personal income tax.
Payee.
Okay, thank you so much. So you see that you call it payee. The full meaning of that payee is pay as you earn. Then personal income tax. The act that govern that payee is what we call personal income tax. Okay, now Mr. A just bought a good from a supplier and is applying tax on it. What type of tax is he going to apply on it?
As value added tax.
Thank you so much. Okay, A and C, just their goods just arrived on the sea and they have to bring it through Benin Republic. That kind of tax they are going to pay while bringing in, what type of tax is that?
Custom duties.
Custom duty. Thank you so much. Now let's move ahead. Now we have what we call state taxes. State also collects personal income tax, and federal also collects federal also collects personal income tax. Now, the one federal is going to collect is for only people that live, the employees that live in Abuja. Why the one state is going to collect is for those who live in other states, that is the other 36 states in Nigeria. And the thing is that you pay your personal income tax where you live, not where you work. If I'm living in Lagos and I work in Ogun State, my personal income tax will be paid to government of Lagos State because that is where I live. Now, pay as you earn, this is a form of personal income tax deducted by employers on behalf of employee and remitted to the relevant state tax authority. And this must be remitted in 10 working days. If you deduct from your staff today, you must make sure you remit it on or before 10th of the following month, so that you can avoid what we call fine and penalty. Then there's also other one we call capital gain tax. Capital gain tax is based on when you dispose your assets. What do I mean by dispose? When you sell your asset. Maybe you have been using a particular vehicle for 4 years, and you notice that this vehicle is no longer supposed to be in use, or you are tired of using these vehicles. So once you sell that vehicles, you are going to look at what is the price, what is the gain on that vehicle you are disposing, and you pay tax on it. And that tax is 10% on gain of that asset. That is if you make gain. We are going to be looking at it in details as we move on. Now, local government taxes. The local government taxes have the authority to impose certain taxes and levies, such as market taxes, property taxes, and tenant rate. I believe this one is straightforward and clear. For those who are in the market, you have to pay what we call, in Yoruba, they call it owori, and that is also the same thing here. So they go around, the tax revenue people, they will collect it from you, and then they remit in the same way. Now, we also have what we call other taxes and levies. That is education tax. The education tax is compulsory for every companies or every liability companies. As long as you register as liability company, education tax is compulsory. And recently, we use 3% on educational tax, and this is based on your adjustment profit. That may not be for this class. Then also, we look at technology tax. This is a tax on communication services and is administered by the National Information Technology Development Agency. Then we also have what we call ecological fund levy, which is 1% of pre-tax profits. Then we also have what we call National Housing Fund, which is also compulsory. This is a mandatory contribution by employees and employers for the purpose of financing housing development. I know that most companies are not doing this, and if they fail to do, because this one is compulsory, and it has to be charged on the gross salary of every staff individual. Okay, so as we move on, we are going to talk more on that as well. Types of taxes in Nigeria, we have direct taxes, we have indirect taxes, and we have other taxes. So for direct taxes, it means you are going to pay that directly by yourself to the government. An example is what we call personal income tax and corporate income tax. So if that is why you see that companies are deducting payee on your behalf so that they can pay directly to the government, because the employer have the responsibility to deduct on behalf of the government and remit on or before 10th of the following month. Then the same thing to corporate income tax. So you have that obligation to pay your tax to the government on your profit if you register as a liability company. Then there are some taxes you call indirect taxes. These are value-added tax. And these are indirect because someone else is paying it on your behalf. If I am a company and I supply a particular goods to A and B company, once I'm giving my invoice to that company, I have to charge tax on the invoice. I have to apply the tax on the invoice I'm sending to A and B company. A and B will pay my money for the goods and services I'm entering. They will also pay that tax to me. Then I will now go and pay it on behalf of A and B to the government. That is why we call it indirect taxes. The same thing to customs and exercise duty. So the company also pay on your behalf and then they charge you as well. Then the other taxes we are talking about is what we call capital gain tax. And that occurs on disposal of assets when you sell assets. Then we also have withholding tax. This one is also deducted. The withholding tax is not a tax on its own, but is a form of tax that reduce your corporate income tax. You can only link withholding tax to corporate income tax. What we are saying is this: if your corporate income tax is 30 million naira at the end of the year, and you have 25 million naira as withholding tax, it means you will not be paying 30 million naira for corporate income tax. What you are going to be paying is 5 million naira. How? The corporate income tax of 30 million naira minus withholding tax that have been deducted on your behalf, that have been remitted on your behalf. That 25 million naira minus 30, that is 5 million naira. You'll be paying that 5 million naira as cash to the government. Then the withholding tax will also be there, making the total of 30 million naira. I'll be asking questions as we move on that. Then education tax, I think I've explained the education tax. Education tax is 3% recently, and the fund is being used to develop institutions in Nigeria, to support institutions. All this money they share to higher institution, to fund to develop it. The fund is coming from the education tax, which they collected from other companies. Now, because of our time, we are moving to tax administration in Nigeria. Tax administration in Nigeria is managed by different tax authorities at the federal, states, local government levels. Each level of government has its tax agencies responsible for administration and collection of taxes within its jurisdiction. Okay? Now, the federal inner revenue, That's what we call FIRS. They are the one in charge of any tax or taxes that belongs to federal. I think I just talked about that. I'm still going to ask question very soon. Then any taxes, or taxes that belongs to states will be collected by State Board of Internal Revenue. That will have their office or their offices in all 36 states in Nigeria. But the federal government, the Federal Inland Revenue, we have only one in Abuja. And taxes that belongs to federal will be collected by Federal Inland Revenue. Taxes that belongs to states will be collected by State Board of Internal Revenue. And then we also have, they also oversees deduction and remittance of payee on behalf of employees. Then we also have the other one as local government revenue authorities. So these are the tax, they are in control of taxes that belongs to local governments. Now, my question is this. What are the taxes that will be collected by federal state? Just one or two is okay for me. Then what are the taxes that will be collected by state government? And what are the taxes that will be collected by local government? Just one or two examples, then we move on. I believe we are together.
I think federal will take company income tax, states payee. I don't know if I'm correct.
That's correct. But is it only states that take payee?
Abuja takes employees in Abuja. Federal takes theirs for those employees living in Abuja. That is remitted to federal. Yes.
Okay, fine. Thank you so much. So how about the local governments? Before we move on. Anybody, anyone else? So for local government, what type of tax are they going to collect?
Local government can collect, they can collect tax from market women.
Thank you so much. That is very correct. So it means we are all together. We are all 100% together. So the next thing to do now is to move on to what we have, which is functions and powers of tax administrators in Nigeria. Functions and powers of tax administration in Nigeria. So what are the powers, or what are the, let's start from the function. What is the function of three people we just mentioned now? We mentioned federal, we mentioned federal revenue, we mentioned state revenue, we also mentioned local revenue. The function is to collect tax collection. Okay. Another thing is registration of tax. Yes. Registration of taxpayers. So if this is your first time you want to start paying tax, you need to register. That's what we call tax ID. So they will need to give you a tax ID so that they will be able to know this is what you have, this is what you are paying for, and this is the person that is paying for the tax. Then for companies also, you must have what we call TIN number. That is tax identity number. So you must have that as well, so that they will know that it's company A and B that pays, or company A and B is here to pay the tax. Then enforcement of tax law. They also have the power or the function to enforce the tax laws. So for every year, there's what we call Finance Act. There's something we call Finance Act. So the Finance Act is always released every year. Finance Act is always released every year. Why? Because for every year, there's going to be what we call adjustment to tax. For example, before, the VAT rate was 5%. But from 5%, they move it to what? To 7.5%. That was done through what we call Finance Act. So we have Finance Act for 2019, 2020, 2021, 2022, 2023. And if there's going to be any change in tax or tax rate or whatever, it's going to be through Finance Act. Because taxes are through HAT, and they cannot be changing HAT every year. But they can use what we call complementary HAT, which is Finance Act, to change some things that are supposed to be changed. Then we also have assessment of tax liability. They also have power to say, we want to assess your tax liability. If a company says our revenue is 5 million naira, government cannot assess that 5 million naira like that. They have the power and functions to come and verify if your tax is actually 5 million naira or is more than 5 million naira. So if they come, that is when we used to have tax audits. So by the time they come to your office, they will investigate. If the amount supposed to be more than 5 million naira, they will give you additional taxes. So they have the power to do that. Okay. Now, the next one is, I'm still going to ask my question, but I would like to move faster a bit so that I'll be able to cover all my points. Then we also have what we call insurance of tax clearance certificate. What we mean here is that for every taxpayer, you should be able to have what we call tax clearance. For that, when they are asking you, are you paying your tax? You'll be able to show them that, see, this is my tax clearance. I'm not owing the government any tax. Okay? Then there's what we call audit and investigation. Audit and investigations simply means that the tax authority have the rights, they have the power to come to your office to investigate if there's any information. If there's anything like what we call tax evasion, we are still going there as we move on. If there's anything like tax evasion or tax avoidance, I'm going to stop there. If there's any non-compliance, that is, you are not paying your tax, your VAT is supposed to be filed 21 days of the next month. Whatever revenue you make in January, you must file the VAT in the next month on or before 21 of February. So they want to know if you are keeping to time. Your withholding tax, the same thing, you must remit as you are deducting from people. They want to know if you are paying as at when due. Your payee before the 10th of the following week, I mean of the next 2 weeks. They want to know if we are paying that tax or not. So they have that power and authority and function to work on that area. We also have what we call tax education and awareness. They have the power, the function to educate people on tax matters. It's not everybody that knows about tax. So for me to know what to pay, for me to know what to do, you must tell me what to do. For me to know that I must pay VAT every 21 days, you must tell me that I must pay it. Now, if I now fail to file it at 21 days, it means I'm at fault. But if I don't know, I may not be at fault. But another word says that there's no ignorance in law or something like that. Then we also have policy formulation. They have the function to formulate policy. We are going to increase our tax to 7.5%. We are going to increase our tax to 5% and the like. Then we also have what we call dispute resolution. Dispute resolution simply means, see, government tax authority just came to my office and they said I'm liable to 30 million tax for the year. And I'm saying, see, based on my document I have here, my tax should not be more than 20 million naira. You can drag, both of you can drag yourself to court of appeal, tribunal court, to settle this matter. So at the process of disagreeing this tax is what we call disputes. And tax authority have the function to settle all these matters. Then coordination with other government agencies, penalty imposition. If there's any fine is supposed to pay, they also do that. They apply penalties and fine if you fail to apply to tax regulation. They're monitoring economic activities. So they also make sure that they monitor tax activities in the nation. Now, this is what we call tax planning. But before I explain tax planning, I would like to explain difference between what we call tax evasion and tax avoidance. Tax evasion and tax avoidance. This one is not on this slide, but I noticed that I omitted that part. So I will just dictate that now. I will try to explain. Tax evasion involves illegal actions. That is illegal action to evade paying taxes. When you are taking illegal action, you don't want to pay tax to the government, but you are not taking that illegal action. What are the illegal action? Example is under reporting your income. Because you know that tax will be paid on the revenue you are going to have. Maybe you have 30 million revenue. You're not saying, because I don't want to give this money to government, I'm going to tell government that I have only 20 million naira in the year. So that your tax will reduce. That is what we call illegal act. And that's what we call tax evasion. Another thing is that hiding assets. You know that you have disposed a particular asset, and you don't want the government to know that you have disposed this asset. Now you are hiding it from them. Some companies, they will have like 5 bank accounts. They will only disclose 3 bank accounts or 4 bank accounts, so that they will not be able to capture revenue in the other bank account. That is tax evasion. That is illegal act when we come to tax, and it's punishable by law. Then the other hand is what we call tax avoidance. Tax avoidance, in the other hand, is the use of legal strategies to minimize tax liability, often taking advantage of what? Of availability deduction or loopholes. Now, what we are saying here is that if you notice that there is certain loopholes in tax laws, which we always have, you can play around that loopholes for you to have less tax to pay. If you use that method, that is what we call tax avoidance. You are only trying to avoid tax. You are not running away from tax. You are trying to reduce your tax in a legal way. Another way is tax planning. When you plan your tax properly, which I'm going to look at now, is also what we call tax avoidance. It's also legal, okay, which is different from tax evasion, which is illegal. Tax evasion is a criminal offense that is punishable by law. Now, what is now tax planning? A tax planning is a strategic approach to managing financial affairs in a way that maximizes tax efficiency and maximizes tax liability. It involves making informed decisions about various financial activities to legally reduce the amount of taxes owed. Effective tax planning is crucial for individuals and organizations to optimize their financial position. So every organization must make sure that they have someone on ground that can take good care of their tax planning. If there are some certain products that they are not supposed to tax you, you must make sure you know. For example, there's something we call disallowable expenses in taxation. That is, there are some tax You know, to calculate tax, let's assume that your revenue is 20 million naira and your cost is 20 million, I mean, is 50 million naira. It means revenue minus cost is 5 million naira, which you are going to be paying tax on it. But the higher the cost, the lower the tax you are going to pay. Now, in this case, if you have a good accountant or tax person in your organization, they should be able to identify the costs you are going to incur that are going to acceptable, they are acceptable to tax purposes. For example, if you give your money to churches or you give your money to political party to support them, maybe you are a fan of APC or PDP, and you want them to come in as a government or as a governor or as a president, whichever way, and you support them with 2 million naira, but your profit in that year is 5 million naira. Government will disallow that 5 million, that 2 million naira you gave to them. And it's going to be part of tax you are going to pay. Because the amount you gave it to wrong body. But if you gave that 2 million naira to orphanage home that are registered under government, or you gave it to there are some bodies that are recognized by government, maybe like Red Cross, like a Boy Scouts and the like. If you give it to them, you are not going to pay tax on that 2 million naira because you gave it to the approved body by the government. I hope I'm not going too deep in this tax. So that is what that is the essence of tax planning. So if you have someone on ground who can manage the cost that you are incurring on different or various activities, they will be able to caution you that, see, oh, this is the exposure. This is what we are going to expose to if you go this way, if you go that way. Now, let me move faster now. Why I ask my question in the next slide. Understanding tax law. You have to understand the tax law. What are the laws? And how are you going to do without going against the law? Okay? Then we also have long-term financial goals. You must be able to plan your financial goals. If I'm trying to project for 5 years, what is going to be tax exposure? If I'm planning to go into a certain investment, which is the next one, investment planning. If I'm planning to go into a certain investment, am I going to be taxed? If I'm going into business, into school business, am I going to be taxed? If I'm going into a construction company, am I going to be taxed? You must know taxes that are related to that investment you are going for. If I'm going to put my money in the bank, am I going to pay tax on it? Is there going to be anything like tax? Is there going to be anything like withholding tax? Is there going to be anything like a VAT? You must know laws that surrounded this particular investment. Then timing of income and expenditure. You must make sure you have a sound accountant that will be able to recognize your income and expenses as at when due. For example, a parent just paid maybe your school fees is 1 million naira per term. But we have some people that are very rich. They can afford paying the whole 3 million for the whole 3 term. And they just tell you, please, I'm going to pay this 3 million naira for the whole term. But they pay that 3 million in August. I mean, in August, which is the first term. First term is August. So it means, assuming they are paying that money in 2022 or 2023, August, what's supposed to recognize in that year, what's supposed to pay tax on in that year is just 1 million naira, not on the whole 3 million naira. Because the remaining 2 million naira is not for that year, it's for the following month, which is 2024, second term and third term. So you must have timing of income and expenses. That is if you have a sound accountant and tax person in your organization. Okay, so let's move on. We also have what we call tax advantages accounts. Take advantage of tax advantages accounts, such as health savings account. There are some
Hello, ma.
activities. Okay, I'm with you, ma. Any question?
Hello, ma. Yeah, please, ma. Are you going over the PowerPoint slides?
Yes, I'm taking it one by one. I'm using the PowerPoint slide.
But I don't know if anybody can say. I'm still on just the first slide, tax and school business, and it's not been moving. I don't know if from me alone or from everybody
Okay,
also.
can any other person confirm that?
Yeah,
Is it the same thing? It's the same thing. Oh, so sorry about that. I'm working on that. I'm moving on that slide. Let me stop sharing and start again.
Okay. Thank you so much, ma.
All right. Okay, so currently we can all see it now, right?
Not yet, though.
Not yet. It's still on the first one. Okay, let me stop sharing and then start again. Let me stop sharing and start again. I don't know, maybe you can see the slide now.
No,
Not
I
yet.
can't see anything. Yes, ma. Not yet. This app is a bit difficult to share. Where is the share icon?
Yes, I have that here. Let me retry that again.
Oh, okay.
Let me retry that again. Okay.
Hello, sir. You have actually not stopped sharing.
Yes, I want to start that again now. Can we all see the screen now? Can we see the screen now?
Yes, you can see your screen, I think.
Oh, really? For me, I can't see. I can't see
I can't
anything.
see your screen, actually. Sorry.
Oh. What happened? I don't know, maybe Mr. Dayo is on call. Are you with us, Mr. Dayo? Okay.
Yeah, I'm with you. So I'm trying to see if I can share from here.
So it will be better if you can share. Okay. You can share from your side. If you can try from your side as well.
Let me try again.
Okay.
Okay, so I think it's shareable from here.
Okay,
so I can hand it over to you, so you'll be able to control it from there. So, but I don't know what page you.
You can just move on a bit. Okay, I think I can move on from here. I believe everybody can see my screen now. Can we all see the introduction aspect?
Yes.
Okay.
You can see overview.
Okay.
We can see overview of Nigeria tax system.
Okay, fine. So this is where I am now. So I'm here now. This is tax planning, what I just explained now. Are we good to go?
Yes, ma, we are good to go, ma.
All right. Thank you so much. So I've just discussed the tax planning, and I believe that is clear. So you must be able to plan your taxes. So we have so many taxes, so make sure you plan it before you go into any investment. You must make sure you know the tax law before you embark on that particular investment. Not only that, you must also make sure that you know the financial implication and the timing of income, when to recognize, when your income supposed to be taxed and when it's not supposed to be taxed. Okay, so let's move on. So I've also discussed tax advantage account. I think that is where I stop. So the tax advantage is talking about, see, there are some, for those who are paying payee, there are some deductions that are not taxable when you are calculating for payee. And that type of tax is what we call medical expense, medical bill or medical insurance. So if my gross salary is 100,000 and my medical is the medical insurance is 5,000, they cannot apply tax on 100. They will need to deduct that 2,000 from that 100 first, because that 2,000 is not taxable. It's tax deductible. Okay. We also have consulting with tax professionals, those who will be able to work with you, guide you, tell you what and what you need to do. Especially for a chartered accountant, like I always say, we have three branches as an accountant. It's either you are an accountant in an organization, it's either you are internal auditor or external auditor, or you are into taxation. So any of the three, for it's very rare to see accountants that are good in that three areas anyway, but any of the three can help you in that aspect. Then we also have what we call compliance with laws. There are some laws. Each taxes are governed by laws. We have what we call Company Income Tax Act. We have what we call Value Added Tax Act. We have what we call Personal Income Tax Act. We have what we call Capital Gain Tax Act. All these tax or taxes have their own act that regulates them, and you must be aware of the compliance with them. What is their requirement and what are the things I need to do? Now, note, effective tax planning requires a proactive and comprehensive approach, considering various aspects of personal and business finances. It is an ongoing process that adapts to changes in financial circumstances and tax laws. Consulting with tax professionals can provide valuable insights and guidance in navigating complex tax situations. Okay, so I believe so far so good. There's no question. Let me just pause a bit for like 2 minutes. Let me hear from you. Do we have any questions so far before we move to the next aspect? Okay, so I want to believe there's no question. Everything is fine. So everything is fine with the explanation, and I don't want to waste time. I'm going to push all my questions to the end of the lecture so that we have enough time to cover the slides. So now let's go to tax reliefs and incentive available to schools. So it means we are coming into the purpose of this meeting now. What are the tax reliefs and incentives? In Nigeria, there are several tax reliefs and incentives provided by the government to support educational institutions. The first one is education tax relief. This tax relief is being collected by companies, liability companies, like Dangote, like Flour Mill, and the like. And is the amount collected is being used to finance and support higher institutions in the country. That is one of the relief. And another thing is what we call value added tax. Schools are exempted from VAT. That is why you can see anything like educational materials you are buying, anything like books, uniforms, what again? Pencil, eraser, they are all exempted from VAT. Why? Most of the time, governments use tax to encourage and discourage. Now they are using tax to encourage schools so that the taxes they are going to be paid, that they will pay will not be as high as they expected. Okay. Another thing is that customs duty exception for educational materials. If you are bringing in educational materials from other countries, it will be exempted from VAT because they want to encourage you in that business you are into. Another thing is employment tax incentive. There are some incentives that are for employment. That is, instead of paying taxes, they are going to deduct, they are going to reduce it from your tax. Example is the medical insurance I just mentioned. Another thing is development. If you spend some certain amount on research and development, maybe you want to go into a particular education, and you need to train your staff. You need to train your lecturer or your teachers on that certain aspect of activities you are moving towards. There's going to be tax relief. That kind of expenses are tax deductible. Okay. Then there's also what we call tax holiday for new educational institutions. Tax holiday is also what we call pioneer status in taxation. That is, if you are doing something that no company has done before in the organization, and is a positive to economy, is a positive to what do you call it, to country as a whole, they can give you tax holiday. That is, see, don't pay tax for 3 years. Don't pay tax for 5 years. So the first thing is that you have to apply for 3 years. Then after 3 years, you can apply for extension of 2 years. That is for companies that are paying taxes. There's also what we call donation and sponsorship. Companies providing donation or sponsorship to educational institutions may be eligible for tax deduction. Just like what I said before at the beginning, earlier. If you give donation to political party, you are going to pay tax on that money you give to them. But if you give money, if you give donation to orphanage, to Boy Scouts, to Red Cross, you are not going to pay tax on the amount you are giving to them. Then education also are part of the people you can give tax to. You can give donation to, that it will not be deductible. It will not be, you will not pay tax on that particular amount. Then we also have research and development tax credits. I think I've also explained that. So there's going to be tax relief for research and development on that aspect. Now, so far so good. We are now going into what actually relates to all. I want to make sure I finish this presentation at least 15 minutes to 4, so that I will have enough time to take questions and discussion and make sure we are all clear. If you don't ask me questions, I will ask you questions because I have so many questions to ask. Now, we are diving into taxation of schools now. What does it mean? Before, there was nothing like tax for schools. Schools are not paying tax. And that is why you can see that many people they find it very easy to open schools and then start operating. They start operating and they start getting their revenue, getting their income and the likes. But now, it is not like that. Schools are now going to pay tax, but there's an exception, which I'm going to explain in details as we move on. Now, like I said, I said there's something like, well, there's something we call Finance Act, and this is Finance Act 2021. Now, before I start this, can anyone just say something about Finance Act? What is the purpose of Finance Act? And why do we have Finance Act? What do you understand by Finance Act? Let's start from there. Just one person or two, then I will move on. Who is ready to bail us out? I've said something about Finance Act before. So anything you know about Finance Act?
If I can try.
Yes, sir. You can go on, sir.
The Finance Act informs of changes in the tax laws.
It's a form of what? Sorry.
It informs of changes, improvement, or updates made to the
Okay.
tax, like amendments made to the tax.
Exactly. Absolutely right. Thank you so much. So when we say Finance Act, is the adjustment to finance, is adjustment to tax laws or tax acts. So before this day, before this 2021 Finance Act, there's no way you are going to find it that schools are going to be paying tax. But because they cannot sit down and say, see, oh, everybody, oh, we are changing our Finance Act. We are changing our tax laws. We are changing our company income tax. We are changing our value added tax. Because there's nowhere to change it, they prepare another thing called Finance Act. And that Finance Act is not only for tax of school, but there are some other adjustments there. But one of that content is talking about taxation of schools. Now, prior to the announcement of the Finance Act 2021, don't forget, I said we have 2019, 2020, 2021, 2022, 2023 Finance Act. It's every year. This section provided for the exemption of profit of any companies engaged in ecclesiastical, charitable, education activities of a public character. In so far as such company engage, in so far that as such company, as such profits are not derived from a trade or business carried on by such company. The Finance Act introduced over 40 amendments to the existing tax and regulatory legislation in Nigeria, including capital gain tax, company income tax law act, personal income tax act, and value added tax, and among others. So the aspect I want you to know here is that we are having charitable or education activities. That was before Finance Act 2021. Now, after Finance Act 2021, they remove something, they remove a clause from that Finance Act. And they said, Section 23, Subsection 1 of the Companies Income Act was amended by deleting educational institution from the income tax exemption list. So they now remove this all educational activities. And that is where everybody knows that schools are now exposed to what? To tax. I believe there's no question yet. Now, if schools are now exposed to tax, and the type of tax I'm talking about now is not it's not value added tax, it's not withholding tax, it's not what again? Other taxes, but we are talking about company income tax. And what is the company income tax we are talking about? Don't forget, I said company income tax is categorized, the tax you are going to pay or the tax rates on company income tax. It's categorized into three aspects. We have 0%, we have 20%, and we have 30%. Now, what type of companies are liable to company income tax? What type of education, what type of schools are liable to education tax? I mean, to company income tax. The first one is ruling was majorly driven by the form of incorporation. The way you register your companies, the way you register your schools will determine maybe you are paying tax or not. Now, limited by guarantee. Any school that is limited by guarantee, congratulations, there's no tax. There's no company income tax for that. And income tax exemption was granted. Now, income tax exemption was not granted based on the form of incorporation limited by share or by of the company. Now, let's move on. Based on the activities of, based on the nature of activities rendered, educational activities and the absence of any restriction to accessibility of the service by the general public, the income tax exemption was upheld, even though the nature of the activity rendered was generally accessible by the public. Income tax exemption was not granted based on the fact that the company was limited by shares. So you can only expose to income tax when your schools is registered by is registered as a public limited company. That is, as a limited company. If you are not registered as a limited company, if you are registered as a business name, congratulations, no tax for you. But if you register as a limited company, there is tax for you. And if you register as a limited company and your revenue is not up to 25 million in a year, congratulations, no tax. If you register as a limited company and your revenue is between 25 million to 100 million naira, congratulations, you are going to pay tax, but at 20% rate. But if your revenue is above 100 million naira and you register as a liability company, you are going to pay tax to the government. I believe I'm making sense. Now, what has changed? I think I've explained this one briefly. The Finance Act 2021 replaced the SY section 23 subsection 1 with a new subsection as below. There shall be exemption from the tax the profit of any company engaged in celestial and or charitable activities of a public character, in so far as such profits are not derived from a trade or business carried out on by such company. I want to ask company, what do you think has changed? What do you think is missing compared to this Finance Act 2021 and before 2021 Finance Act? Just 1 minute and we move on. I hope you are not tired. I always want my class to be interactive. And I can as well call anybody on call to give us the answer. But I don't want to call. Anybody who's ready to tell us, it's just a one sentence. Just one sentence, then we move on. What do you think has changed between this and prior to Finance Act 2021? This is now Finance Act 2021. So what has changed between now and the previous one we have. Anybody who's ready to help us? Okay, it's like I'm going to call somebody who's ready to help us, please.
Okay, let me give it a shot. I think the major change. I think the major change is that educational institutions were removed from the tax paying exception list. You know, that's what I think.
Exactly.
Yes.
That's absolutely right. So education now have been removed from that exception list, and that is why it is now liable for them to pay tax. However, if you register as a business name, you are free. But there are some schools that have registered as a business name in the past. The government is now making it compulsory that they must migrate from business name to what? To limited liability, so that they can pay tax. Okay, but some people are yet to migrate. And another thing is that I'm not sure government can get all the schools that have not migrated. I think they can get if they go through their database, but except if they are really ready to take that enforcement. So we can still be hiding. But now there's no how any education, or you want to start a business, you want to start a school, and you are now planning that you want to register. You cannot register again. You cannot register any schools or institution again as a business name. You must register as liability, so that whatever you have, government can take from it. Some people are saying, government, they are not serious. They don't know what they are doing. We are trying to fill in the gap that they are unable to fill. Fine. But the perception of the government is that, see, most of these schools that they are saying they are helping us, they are actually making profit more than any other companies. So if they are making profit more than ordinary companies, why wouldn't they then pay the taxes for us? That is their own perception, and that is where they are coming from. Let's move on. I think I have few slides to go. Now, what are the implications? Now, everybody knows that education must pay tax. If you now fail to pay tax or taxes, especially company income tax, what are the implications? What are the uh, uh, fine and penalties that is open to you? The first one is that for you to fail to pay the tax is 50,000 in that month that you fail to file it. Then 5,000 every month as the failure continues. For example, if your year end is August, you are ought to have prepared your financial statement before August and file your account with tax authority and file with CAC. If you fail to file with tax authority on the 1st of September, you are already liable to 50,000 naira. If you fail to file in October, there's additional 5,000 to it. If you fail to file in November, additional 5,000. And it continues to accumulate like that. And when they notice that this person is very, 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 very stubborn, and is not even taking our, is very rich, he's just paying our penalties and fine easily. They can come to your schools, they can come to your organization and close the business. That's why you can see they can just close the gates. You will not be able to operate again. They have that power and duty. Now, with the deletion of education from the reference section, profits generated by these institutions should no longer enjoy income tax exemption and will be liable to company income tax at 0%, at 20%, as 30%. I believe you all know that. And also such companies will also be subjected to minimum tax of 0.5% of their gross turnover. Now, in a situation whereby your revenue is more than 25 million naira, but you make loss, tax is paid on the profit. But in a situation whereby the profit you made, I mean the revenue minus cost is resulting to loss, you won't be paying what we call company income tax on that, even if your revenue is more than 25 million naira. However, they are going to apply what we call minimum tax. The minimum tax will be applied on the revenue, and it's going to be 0.5% on the revenue. For example, if your revenue is 100 million naira and the total cost is 150 million naira, it means you make loss of 5 million of 50 million naira. No tax, even though your revenue is more than 25 million naira. However, there's going to be tax on that 100 million naira revenue you made, which is going to be 0.5% on 100 million naira. And you pay that to government as what we call minimum tax. Because many organizations are hiding, they are passing their financial statements, and they are always telling government that we make loss, we make loss, we make loss. The government will now say, okay, fine, since you make loss, no problem, but you are going to pay what we call minimum tax. I believe that is clear. There's also what we call penalty on unpaid taxes. So if you fail to pay your tax, there's going to be 10%, and interest also will continue to compile on that taxes. Then educational tax or education tax we have, although the Territorial Education Tax Act was not expressly amended to reflect such treatment, it appears that such profits should also be subjected to tax. So educational tax, which is 3% currently, before it was 2.5% in 2022. In 2021, it was 2%. The thing just keeps increasing. As Finance Act is coming, then the educational tax was increasing yearly. Now, what they are saying is that though the Finance Act did not talk about school paying educational tax, but as long as they are going to pay company income tax, the education tax always go along with company income tax, which means they are also liable to 3% as of today on tax. Now, under the self-assessment regime, companies' income tax return is expected to be filed on or before 6 months after accounting year end. So if your year end is August, you are expected to file your return on or before 6 months. Failure to do that attracts penalty. Now, this is what I mean. This is not for existing companies. It's for companies that just registered. You must make sure you file on or before 6 months. I mean, immediately after 6 months of commencement. Then, reliable interference is the fact that the text rules state that the determination of accessible profit on which text should be applicable is to be determined or reflective of such amount as computed by the CTI. CITA, we call it CITA, that is Company Income Tax Act provision. Penalties of this is 25,000 for the first month when the failure occur. Now, it's no longer 25, it's now 50,000 naira. Don't forget the things continue to update based on the Finance Act. Now, implication continues. We also have withholding tax. You are to, as you are deducting withholding tax on those who are rendering services to you, you must also make sure you pay on their behalf on or before 21st of the following month. If you fail to pay the withholding tax, you are exposed to fine and penalty of the amount you failed to remit to the government. Now, we have two things here. One thing is to deduct from the supplier and not paying on their behalf. There is fine and penalty for that. Another thing is that not even deducting at all. There's another penalty for that, which means that government is putting us at a tight corner. You must deduct without tax and you must pay. If you fail to deduct, penalty and fine. If you deduct and you did not pay to government, penalty and fines. Another thing is similarly payment for certain services rendered by educational institution may also suffer withholding tax. So withholding tax also can also start coming in. Don't forget, withholding tax is to reduce the company income tax you are exposed to. It's not a different tax on its own, but is a supplementary, is to offset, to reduce the company income tax you are exposed to. Then we also have value added tax, though schools are not paying VAT currently, as long as it's on books and educational materials, as well as tuition fee. Your tuition fee, either primary school, secondary school, or tertiary higher institution VAT, tuition, they are exempted from VAT. You are not paying VAT. Okay? Now, what is now the next thing? What should we do? As a school owners, as someone who works in school, with the amendment to the provision of the Companies Income Act on the taxation of companies engaged in educational activities, it has become important for such companies to understand the key focus area in ensuring compliance with the act. We cannot say no, we are not going to pay anything to government. You cannot say government, you are just playing. They have power and duty to sanction every organization. So as a school, what do we now need to do to maintain our good relationship, to be an obedient citizen to our government? How can we help as an accountant? The first thing is that to avoid any unforeseen risk, liability, we also committed to providing relevant compliance and tax planning measures to ensure proper tax optimization. Our support services provide a cost-effective approach to compliance and are designed to assess risk, identify the gaps that created the risk, identify opportunity, and provide a roadmap for improvement. Our assistant in this area includes the following, which means that schools now need to get accountant. There are some schools before that they do the accountant by themselves. They do, is it not just to collect the money and make sure they put it where it's supposed to be and pay salary when it's supposed to be? But now, every schools need a professional accountant to direct, to help them in every areas, especially in tax matter. And that is why we have this. Now, companies income tax compliance support. For that accountants, recently I noticed that I'm seeing vacancies from schools trying to get accountant, especially chartered accountant, so that they can help them in this area. So that they will know when they need to pay their VAT, when they need to pay their company income tax, what are the areas they need to plan so that they will reduce their tax exposure. Training academy or capacity building. They will also need to train business owners. They will need to train schools owners so that they will know when and what they are to do in order to avoid high taxes. Don't forget, tax avoidance is a good idea. You are still doing the right thing, and you need a professional in that area. But tax evasion is the one that is illegal, that you must not practice. Analysis of finance bill. So this finance bill is always yearly, like I said. So is the chartered accountant that will be able to know what the Finance Act is talking about and where they need to make the adjustments. Then the third one is tax and finance operate. They will need to know how to operate, how to match taxation and how to match the finance aspect of the organization. Then bookkeeping and financial reporting support to management. You need to, every school now need to keep their documents, because tax people can only reduce your tax if you are able to give them evidence. If you are saying that, if the tax people say your tax liability is 20 million naira, there's nothing you can do to reduce you to 10 million naira except you have evidence. You have documents to tell them that, see, oh, this 30 million you said I'm exposed to is not so. These are the documents that can back up that this is not my profit. And the only person that can help you to do that is accountant, a professional accountant who knows all this in and out. Then they will be able to give advice to the management on what decision and what they need to take. Payroll management. The payroll management is talking about payee. It's talking about payee. That is, how are they supposed to calculate the payee? The calculation of payee is a bit tricky, if I'm to say that word, if you are not used to it. It's based on percentage. We have 7%, we have 15%, we have 19%, we have 21%, we have 24%, we have 11%, and so on like that. So you must apply percentage accordingly. So you need a professional to do that for you. Documentations and filing. You must know how to file. You don't need to involve tax consultants before you can file your taxes. It's what you can do on tax promise yourself. You can go to tax promise, file your VAT yourself. You can go to tax promise yourself, business owner themselves, you can do that. Or accountants in your organization, they can file withholding tax by themselves. They can file the company income tax by themselves. They can file payee by themselves. They just go to the state they belong to, log in. Everything is now online. They make life easier. But you need a professional who can do that. Fixed asset verification, schedule and register. Why do we need fixed asset registration or fixed asset register? Because there's something we call capital allowance in taxation. For you to have reduction in tax, if you have 30 million in tax, capital allowance can reduce your tax. If you have 30 million to pay as a tax and you have capital allowance of 10 million naira, it means 30 million minus 10 million. It means you'll be paying 20 million naira as tax. How do we get that capital allowance? Capital allowance is a relief given to companies that purchase assets to run the organization. If I buy motor vehicle now, if I buy a building now, if I buy land now, if I buy plant and machinery, there are some certain tax relief on that particular equipment I bought that is going to reduce my tax. However, capital allowance and depreciation are just a temporary difference. It's not for this discussion. Now, certificates of acceptance of fixed assets, CAFA. So you have to get the certificate from the tax people before they can make use of that capital allowance. Now, solution to all this problem. Insight on records to reports and tax compliance. Like we said, you must have what we call account bookkeeping. Understanding of IFRS. There's something we call International Financial Reporting Standard. This is the standard that guides every accountant on how to treat and how to report every transaction. So you must have someone that have that knowledge, who can treat every transaction based on these standards. Development or review of accounting policies. You also need to sit down with management to review your policy. When do we sell? When we sell, what is that? When it is the time you must pay us back. Okay? And what is the period? Then we also have consideration of the compliance with tax and regulatory alignment of tax return to source document. I think I have 5 minutes to go. And in a summary, what we have been saying since morning is that tax is a compulsory levy and is compulsory for every individual, the business or businesses, and they have to obey the laws. However, some are exempted from VAT, from tax. Some are mandatory to pay the tax. And currently now, schools are now part of those who are mandatory to pay company income tax. However, they are still exempted from VAT on educational materials. This has become a problem that has to be solved. And for them to solve this problem is simple. They just have to take a good accounting standard. Make sure they keep their records. Make sure they are able to give as the tax people will be requesting for it. However, currently now, I'm not sure they are focusing more on schools, except schools that are very big. That is where they are focusing. But currently, they are yet to start going to schools one by one. But there's going to be fine on it for not remitting. Okay, so this will be the end of the presentation now. So I want to listen to questions and answer if there's any.
Okay, I have 2 questions.
Okay, ma'am.
How long is the tax holiday for a newly registered school?
Okay, that's what we call tax pioneer status.
Yes.
You have to apply it yourself. When you apply for it, the tax authority will come to your organization to verify if what you are saying is correct.
Okay.
Then you apply. The first is always in two phase. So the first phase is that you are going to apply for 3 years. Then when that 3 year expires, you will apply for additional 2 years. But you have options. You may decide not to apply for the remaining 2 years, or you may decide to apply for the extension of the 2 years.
Okay, my second question. That's fine. Very, very good. My second question. In this time, let's say after the 3 years, your revenue is less than 25 million. Are you expected to be filing new returns, or how does that work?
That's a very good question. So your revenue, the tax, I think it's in 2 ways. The first one is VAT. The other one is company income tax. When you are talking about company income tax, CIT, you don't need to pay tax if your revenue is not up to 25 million naira. And you don't even need to file anything.
Okay.
You are good to go. But
that's fine.
If you are talking about VAT, even if your revenue is less than 25 million naira, you must file the VAT every month. But the only thing you are going to file in is nil, nil, nil. But immediately your revenue is up to 25 million naira and above, you must start paying the VAT monthly and filing. That is for VAT. I hope that
Thank
is
you.
clear.
Very
All
clear.
right.
Thank you.
All right. Any other questions? I'm still waiting. Just based on what we have discussed or any other thing that is, that has been bothering you on tax, either payee or whatever tax. In the next 2 minutes or 1 minute, if there's no question for me, I will throw just 2 questions and everybody must contribute. Everybody will contribute one by one. If there's no question in the next 1 minute.
Okay, I have another question.
All right.
You said that if you have to pay outsource training of your teachers, for example, there's something you said about that research and development training has tax relief. I didn't really understand what you meant there.
Okay. What I mean is that if you incur a particular cost on your staff for training or development, that kind of cost would be acceptable, will be accepted by tax authority. That is, they will not reject that type of cost. There are some costs that tax people will reject. They will not accept. They will tell you this cost you are incurring is none of their business. Because there are some costs, the higher the cost, the lower the profit, the lower the tax you're supposed to pay. But there are some costs. There are some costs that the tax people will reject. They will tell you that it's none of their business. For example, maybe you are going on a Tomiland bridge. Now, currently, the Tomiland bridge is closed. They said nobody should take the other side. But you, because you are late, you take the other side. And you are going full, and the person is being arrested. And they said the fee you are going to pay is 5 million naira as a fine for doing that. If you take that to the tax people will say that is not their business. Because so they will reject that cost. You will pay tax on that 5 million naira.
Okay, so what you're saying is that expense will be in your books. Exactly. It could be either legitimate or illegitimate, but for like training and development, it can be a legitimate expense in your books.
Both will be in the cost. Both will be part of the cost.
Yes.
But revenue minus cost supposed to give you what? Supposed to give you the
your
tax
profit
or profit you are going to they are going to pay on. So the same thing. But there are some that the government, if for example, you make profit of 5 million naira, but out of the cost you have incurred, that fine is part of it. That fine is like 3 million naira. What they're going to do is that they will add back that 2 million naira to 5 million naira of profit. It means your profit is no longer 5 million. Your profit is now 7 million. You will now pay tax on that 7 million naira.
Okay.
But assuming is a kind of expenses or is a kind of cost you incur in developing your staff, that cost will be accepted. They will not be adding it back to the profit you make.
Okay, understood. Thank you.
All right, you're welcome. Are we good to go? Any other question? I want this class to end by 3:40, 3:50 or 3:53 or so that I can give the room to Mr. Dayo. Okay, so just a brief question, just a simple question. Based on what we have done so far, everybody will mention taxes that schools are exposed to as of today, one by one. What type of taxes do you think schools are exposed to as of today? It's not more than that. Who is going to open the floor for us? And the next 3 minutes should be done. Everybody must talk. So it's better you pick the one you know first before another person will pick the one you don't, before you are thinking about.
Corporate income tax.
Company income tax. Thank you so much. One is gone.
And payee
Another
tax.
payee, okay.
Educational tax.
Educational tax, okay, good. Which one again? You still have more? Which one again? Are they going to pay something like withholding tax? Is it possible for schools? Is there anything like tenement rates? Is there anything
Yes,
like
they'll pay tenement rates. Yes.
That's good. For local government, what again do we have to pay?
There's some state taxes now, maybe like waste management, water, all those kind of things. Oh, these are tariffs or levies.
Okay, so anything that is levy, compulsory levy or charge, it's what we call taxes. So thank you so much. Any other thing? I think someone wants to say something. You want to give us additional one? So everything is on this slide. You can just go back to the slide. I believe the slide will be available. I don't know yet, but that is Mr. Dayo. So thank you so much. This is where we are going to stop for now.
Thank you so much.
Yes, sir.
Thank you.
Yes,
thank you for your time, madam.
Thank you so much. Okay, so I hope Mr. Dayos is in the house. Are you still on call, Mr. Dayo? I'm waiting for him if he's on call so that he can, if there's anything you want to do, if you want to address anybody here. Okay, so I think it's not on call. So I'm going to end the meeting or I'm going to leave the meeting, whichever way, so that we are good to go. So thank you so much and enjoy your weekend.
Thank you. Thank you.